Marc Faber, editor of Gloom, Doom and Book Report. He spoke to us earlier, of course, and we begin by asking him about where do we stand today, and is the boom coming to an end and the doom likely to begin? This is what he had to say.
Well, I mean, we had a big rally from the March lows everywhere in the world. On the S&P over 60%, and as you know, in India over 100%, and many shares have gone up 3 times from the lows. So we had a huge rally. And obviously, you cannot expect the next 8 months to have a similar kind of a rally as we had in the last 8 months. In other words, up to 100%, and in some stocks 300, 400%. I think the next 8 months or the whole year 2010 will be more choppy. In other words, maybe we go up another 20%. And then we'll have a more meaningful correction, or we may already correct here somewhat and then go up again. I don't think that in the world you will see again the March lows.
Well, that's not too pessimistic, but we also asked him about one commodity that most Indians are interested in, gold. The recent rise for most part on the back of a weak dollar. And should the phase of easy liquidity be over, would it be time to get cautious on gold again? Let's hear him.
Well, I think, you know, the dollar has obviously been very weak, and I mean, you say the dollar has been weak. Yeah, the dollar has been weak, but the other currencies are not much better either, because either they're tied to the dollar one way or the other, or they are not tied to the US dollar. They've gone up against the US dollar, but basically the ECB in Europe is also a money printer. And the euro has many problems, as well as other currencies that were strong against the US dollar. So what can happen is that essentially the dollar is strong, but gold still holds or even goes up, because other currencies holder buy also gold. Say if you're a European or if you're a Swiss, maybe you decide to shift some money into gold, and especially we have now in the world 7 trillion in foreign exchange reserves, up from 1 trillion in 1996. So we've gone up in the foreign exchange reserves, in international reserves, 7 times. The price of gold hasn't gone up 7 times over that period of time. And in Asia, we have essentially central banks that hold, including Japan, 70% of these $7 trillion. And they have, by and large, less than 2% of their reserves in gold. So I think that a lot of central banks will follow the example of the Reserve Bank of India. By the way, the Reserve Bank of India deserves applause. They've done a very good job, by and large. It's a very well-run central bank.